Hey everyone, me Kevin here. Welcome back to another closing live stream. We have the stock market still mostly green. We actually held on to gains today, which is pretty impressive because very frequently we have seen markets open green in this last 6-week period here, only to rotate substantially red, hit lows within the day, try to recover within the day, then hit lows again at the close. But yesterday was our indicator that all of a sudden things were different. Yesterday we broke trend. We broke trend with the S&P 500. I will show it to you. I will not rehash what we've seen previously, but when we looked at yesterday's trend on the minute chart, we saw something very special. Yesterday, for the first time, we actually ended up, despite opening higher, rotating down, we ended up closing higher than we did the lows of the day. That was a trend break, not including last Friday. The 4 days before that all had the end of the day include fund sell-offs, institutional sell-offs, trader sell-offs, and we saw stocks fall into the close. That broke today, or is breaking right now. I'm sorry, that broke yesterday. And we are seeing the results of that today. An S&P 500 that is up 1.37%, an S&P 500 that opened up, and took off from there. It's been relatively flat in the day, intraday. But we're going to see how we close today. Are we going to have a sell-off today? Are we going to revert back to what we saw Monday, Tuesday, Wednesday, Thursday of last week? Look at it. It's incredible. Monday, Tuesday, Wednesday, Thursday of last week, you saw if today was one of those days last week, we would see the S&P 500 come right back down to this orange line right here into the close, and that has historically been a decent buying opportunity, a buy the dip opportunity. Now, I saw indices opening up green this morning, but even though I knew the market was opening up green this morning, I still made purchases this morning in this volatility here because I believe that pricing was still much more fair at this point than what we've seen with some previous highs in, let's say, August or early September. For example, bought Enphase, bought Lemonade, and I also bought my basket at metkevin.com/pi. So this is it's been a market of buying the dip. Been very excited about that. Have been watching here though. Roblox fall about 6%, kind of heading back to IPO pricing. Not so great for ARK Invest. Also been watching Camber Energy sell down. Camber Energy is a company that I tried to short at $4.80. You saw it here on this live stream. I tried pressing short. I went to options to try to short this thing. When this thing was at $4.80, I was not able to short it, and I was very disappointed about that. Now, when I zoom out, I'm also extremely disappointed about that because you can see that $4.85 was the top, and it's now at $1.61. That's because fundamentally this company loses money. It's overvalued, but it was a momentum mover. A momentum mover, much the same as we're seeing momentum movement in the SHIB army. Now, that's not to say that the SHIB army has to suffer a similar kind of fall as what we've seen with Camber Energy here. It wouldn't surprise me if a lot of people who were in Camber are going to SHIB right now. But SHIB has had some pretty incredible volatility, some incredible peaks here. And on the 7-day chart, it's been on a complete tear here. It's really incredible. But we want to always be cautious that if we are in a momentum movement, we just want to remember it's okay to take profits. If you want to hodl, you can, but don't ask why you're holding bags if the momentum goes away. That's sort of the rule of thumb. But play it. Play momentum plays. It's okay to be a part of the movement. It's okay to invest in them. You get a big squeeze and you get out, that's fine. That's what everybody wanted to do with AMC, right? A lot of people didn't want to be holders in AMC. They wanted to get in for the MOAS and get out. And who knows, maybe that'll still come. Anyway, so let's go ahead and take a look at some of the other things going on here. And it does look like Biden is expected to speak about 12:30. But probably not until 12:45 to 1. Biden's scheduled for 12:30, but expect him to start around 12:45 to 1. There we go. And there we go. Okay, perfect. All right, so let's see here. Lordstown Motors down 11% here. Yeah, getting smoked, really. It's this sort of catalyst really started after the sale of their facility to Foxconn. Volatility index down very nicely here. Yeah, down about 9.49%. It's awesome. Good to see volatility come back down because that means fear is leaving the market. And remember, this is an expectation that we've had. Now, we think that expectation is going to go down, specifically because we're going to get jobs numbers this week. That's going to solidify information for us in terms of what to expect on the uh, taper, because the Federal Reserve is going to be closely looking at these job numbers. And then when they have the job numbers, we're going to know, okay, so where do we stand now? Are we going to taper in November, or are we going to delay again? The expectation, obviously, is that we are going to taper in November and be finished tapering by the middle of next year, potentially as late as the fall of next year, which I did think it was interesting that the Federal Reserve earlier today did indicate that they may wait or to the fall of 2022 to complete their taper. But then again, that was only one person at the Federal Reserve, so not necessarily an everyone response. So let's see what else we have here. We have jumping on over. Okay, here we go. Let's see. Let's look at what's going up. We got 15.5% on Smile Direct. So we've got some love coming back to Smile Direct. You've got Marathon Digital up 9%. Cloudflare kicking butt. I've been watching this one, considering starting a position in the cybersecurity plays, specifically because of the madness that we've seen, even with the Facebook outage here. And that's not even to suggest that for sure this Facebook crisis was a matter of security, but it certainly is a matter of problems with the internet. So incredible moves here on Cloudflare, finally moving back up after rotating down here relatively sharply for a period of time, coming back down to really just July pricing, but going right back on its tear over here. Dogecoin up 7.34%, likely moving because of the SHIB run. We've got MicroStrategy up 6.9, Li Auto up 6.24, Netflix coming back with a 5.78. Look at that run on Netflix. I mean, you have been trading relatively sideways here for quite a while, and now we are at an explosive level of growth here all of a sudden, and it came a few weeks after earnings. Now, it came actually about a month after earnings that all of a sudden you got this explosive growth here. Yeah, well, I know that's what I said, that Facebook wasn't security related. We did a video on that yesterday, but you still have this potential impression of people thinking, oh my gosh, look at how much damage. It's a collateral effect, right? People think, oh my gosh, look at how much damage can happen when something shuts down. Imagine if it was a hack. That's my expectation, unless, of course, there was news on Cloudflare, which we could pull up if there was news on Cloudflare. Cloudflare. Gotta say it correctly, Kevin. So, all right, let's see. DQ, Newegg, Coinbase. All right. All right, let's see what we got here. So, I want to take a peek at BTC as well while we get our terminal up. BTC USD. Always got to write that USD in there. All right, here we go. So Bitcoin's almost at 51,000, folks. Earlier this morning, I talked about how crypto was really taking off the more and more we're seeing the Evergrande crisis resolve itself. And we are seeing that to be true. The less fear that we have in the market, ironically, even though often crypto is deemed this safety asset, the more people are flocking back into crypto. And the more institutional investors, the more individual investors are going back into crypto. But it is a pretty positive day for most stocks today. Keep in mind that this could be like a $49 stock that went to $51, and it'd be relatively similar. It's just here we consider it 49,000 and 51,000. It seems like such a much larger move. So percentage-wise, though, about 3%. Upstart moving up about 3% as well. Facebook up 2.64% after their hearing. Yeah, Facebook obviously having sold down here since about the end of August. We've really sold down. This last month's been a little rough for Facebook. Same for some of the other tech companies. Google coming back. Enphase sitting at 147, coming back a little bit during the day here. SoFi 147. And then again, back to the downside. Yeah, there's Camber going down 55%. My goodness. It'd be interesting to see if it goes back down to $1. I mean, full on legit penny stock. I mean, it's always been a penny stock. Under $5 is penny stock, but then I look at it and I'm like, yeah, it's a penny stock, right? Because it's actually trading for pennies. Yeah. Not that you necessarily want that for a company, but that's the way the market works. Okay, we were going to look at Cloudflare. So let's see if there was any news on net. Let's take a peek here. All right. So individual company news for Cloudflare. We have Cloudflare, call volume above normal and directionally bullish. Where Cloudflare stands with, okay, no reason to. Wells Fargo starts Cloudflare at equal weight price target 122. Ah, that could help. Okay, a price target upgrade by Wells Fargo. And that is an initiated coverage, which is great. And there's been so much concern about this potentially being a hack-related incident that the CEO of Cloudflare says there's no suggestion of an attack in the Facebook outage. It's always fascinating because that's anytime we go to, we recognize the fragility of our computer systems. Hacking is something that we immediately go to, which makes complete sense. So, all right, let's see here. Right. Let's take a look at what we've got going on while we wait for Joe Biden to speak. Let's see what's going on in the news. Give me actually, let's see. What's your news alert, Sarah? Let's hear it.
Cereal plant workers have gone on strike, including at plants in Nebraska, Michigan, Pennsylvania, Tennessee. The company telling us right now in a statement that they are in negotiations with the union, adding, quote, "We are disappointed by the union's decision to strike. Kellogg provides compensation and benefits for our U.S. ready-to-eat cereal employees that are among the industry's best. Our offer includes..."
Could you imagine if Tesla had union workers?
Ladies and gentlemen, please welcome to the stage John Osika, Training Director, Operating.
Sorry, I have this playing here in the background because we're waiting for Joe Biden to speak. And yeah, look at that. You got to set up the Caterpillar Build Back Better posters and such. So, hey, look, there's Joe. There he is. It's actually earlier than I expected him to show up. All right.
Good afternoon, and welcome to the International Union of Operating Engineers, Local 324 Construction.
You know what we'll do is we will wait for Biden to actually speak. In the meantime, we'll explore a little bit here. So we'll come back to this speaking, and we want to listen for Biden. So once we get Biden up, we'll be right there. Stocks rebound, treasuries fall ahead of jobs data, market wrap, YOLO crowd losing some of its appetite for buying the dips. Oh, check this out. Retail traders, the market's most avid dip buyers earlier this year, are showing some evidence that the famous "you only live once" appetite for risk is losing steam. Individual investors were hard at work in previous sell-offs in the past year, but are largely sitting this one out as previous drivers of euphoria like stimulus money and Federal Reserve backstop are fizzling out. That's fascinating to me, that potentially because of less stimulus money or less unemployment funding, we're seeing less YOLO-style trading. I do want to see what metric they're tracking, though, to actually determine that. After the S&P spent 2 straight weeks in the red, small lot options traders, those buying 10 contracts or less at a time, spent just 43% of their total volume on bullish contracts, the lowest share so far this year. That's interesting. So they're just basically tracking people who are doing small volumes of contracts, assuming those are the retail investors. As the market sold off further last week, they eagerly paid up for puts, so much so that the daily average premium they shelled out for protection jumped to $480 million, the most since May, according to the Options Clearing Corporation. That's incredible, folks. That is something that I definitely did not recommend. I made it very clear personally, and you could always be wrong. Everybody ultimately has to make the decision for themselves. This is not financial advice for you. But come on, the catalysts we have are temporary. We know that. We talk about them over and over again. And I'm not talking about inflation being temporary. We know that's lasting a whole lot longer than expected. But the Evergrande crisis, it's blowing over. It's sure there's still issues going on, but it's getting better. That's leading cryptocurrencies to go up. We've already passed the budget. We're not doing a government shutdown. We're going to get this debt ceiling and the infrastructure package done. We're about to hear an update on this stuff. CPI and jobs data is going to come out. We've got pretty good clarity on when the taper is happening anyway. So who cares what it really happens with these reports? It would have to be some kind of like total oddball for anything to come out of it. But anyway, while the premium small lot traders pay for RUT protection is still off the January highs, the figure or the amount of premium, the amount of folks buying puts is still off of the January highs. The figure has been rising as the stock market kept falling, signaling expectations for more losses to come. So January, check this chart out right here. January's right here. And it looks like a lot of puts were bought in January around the GameStop, or this was mid-January. That's not so good. This was the better time to buy puts right here, mid-February, it looks like. And then a little bit around that May 12th time. But yeah, I mean, those were falls. Now it depends. Did people buy them after the market were starting to fall or before the market were starting to fall? And that's the issue is people see like 2 or 3 days of red and they freak out. Anyway, Biden's up. We'll get back to this.
As the single best workers in the world because you're the best trained. I wish the American people understood how much serious training goes into being a union worker. I really mean it. You're the best in the world. I was kidding. Someone said to me earlier that I said, I'm a union president. I'm a president of sports unions, not labor unions. And someone pointed out to me that I allegedly have used the word union as president more than the last 7 presidents combined. You built the country. No, not a joke. You built the country. And it's great to be here with several excellent members of Congress. Lisa Slotkin, Alyssa, you don't want to screw around with her. She's an intelligence officer as well. So she's forgotten more than
While he does his introduction here, make sure you remember to get your up to $70 in free stocks by going to metkevin.com/public. Get up to $70 in free stocks. They won't buy or sell your information, and don't use payment for order flow.
paid for. Not a single penny raised in taxes by anybody making under 400 grand. And Debbie, you're the best in the world. You and John have been so friends of mine. You've been for so long.
All right, let's hop to it, Biden. Come on, let's go. We all want to hear what's going on with the infrastructure.
Emotionally difficult, but you've done an incredible job.
He's got to get those union votes.
Thank you. And Dan, you're okay, Dan. You ain't quite like the woman sitting next to you, but all kidding aside, Dan, you've done a great deal. I mean, I really mean it. You're always there for everything that's important to constituents, and you understand what I'm going to talk about a little bit later. The way we built this country is from the bottom up and the middle out, not from the top down, and you get it. And Andy, as my dad would say, you got good blood, kid. Thank you for what you're doing. Thank you for stepping in, and thank you for the great job you do. Michigan, I also have, it's also fortunate to have an outstanding United States senators who are doing what they're supposed to do. They're in Washington because the Senate's in. Debbie and Gary are in Washington now, and to cast some.
Come on, Biden, let's get to the point.
Of course, it's great to be here with.
Sorry, that's me.
We become friends. An outstanding governor, one of the best governors in the United States of America, and her lieutenant governor, who covers her in every way, both in terms of physically and mentally and every other way.
Is this immature? Action.
Thank you. Look, I know there's a lot of noise in Washington. There always is, but it seems to me a little more than usual now. A whole lot of hyperbole, a lot of heat, and I'm here today to try to set some things straight if I can. I want to talk about what's fundamentally at stake for our country now at this moment. I know it's an overused phrase, but I've been using it a lot. We're at an inflection point. Anywhere from 40 years in America, there's an inflection point. We have to choose what direction we're going to go, what we're going to do.
Do they watch my videos?
But who are we going to be? For a long time, America set the pace across the entire globe. For the better part of the 20th century, we led the world by a significant margin in investments in ourselves, in our people, in our country. We invested in our infrastructure, in our roads, highways, bridges, ports, airports, and the arteries of the nation. that allow commerce to function smoothly and swiftly and allow us to generate significant income. We've invested in our people and opportunity. We're among the first to provide access, for example, to free education. It's the reason why in the 20th century we began to take off. It was back in the late 1890s. We decided among the first countries that we were going to be the first nation that every single American, regardless of their background, and it wasn't at the time regardless of their background, but based on income, would have free 12 years of education. We invested to win the space race. We led the world in research and development, led to the creation of the internet. And but then something happened. We slowed up. We stopped investing in ourselves. America is still the largest economy in the world. We still have the most productive workers and the most innovative minds in the world. But we're risk losing our edge as a nation. Our infrastructure used to be the best in the world, literally, not figuratively. Today, according to the World Economic Forum, we rank 13th. Our infrastructure, 12 nations have a better infrastructure than we do, which means they can move product. They can do so many things better than we can do it. We're among the first in the world to guarantee access to universal education. Now, the Organization of Economic Cooperation and Development ranks America 35th out of 37 major countries when it comes to investing in early childhood education as a percent of GDP. Think of that. Think of that. Of all the industrial nations in the world, the instinct Americans would say, if you asked them 25 years ago, would say, we're number one. We are not. There's only 2 industrial nations that are lower than us. All those investments that fuel the strong economy, we've taken our foot off the gas. I don't know what's happened. The world has taken notice, by the way, including our adversaries. And now they're closing the gap in a big way. So it's essential that we regain our momentum that we've lost and the work of our time, it seems to me, those of us who hold public office, is to prepare ourselves to be more competitive and to win the fast changing 21st century in the global economy. Things are changing incredibly quickly. That's why I propose 2 critical pieces of legislation being debated back in Washington right now. The first, a bill to invest in our physical infrastructure. And the second is a bill to invest in our human infrastructure. I'll talk about both these bills in just a moment, but first, I want to set one thing straight. These bills are not about left versus right, or moderate versus progressive, or anything that pits Americans against one another. These bills are about competitiveness versus complacency. They're about opportunity versus decay. They're about leading the world or continue to let the world pass us by, which is literally happening. To support these investments is to create a rising America. America is moving. To oppose these investments is to be complicit in America's decline. To support these bills is to pursue a broader vision of our nation, and oppose them is to accept a very cramped view of our future. This isn't about 2 pieces of legislation. It's about the inflection point I mentioned earlier we are in our history, the world history. So here's what I'm proposing. First, the infrastructure bill. It's about rebuilding our roads, our highways, our bridges, our ports, our airports, our broadband, all the things that need repair. Our arteries of our economy have always been fueled by the economic might and dynamism of Americans. Across the country right now, 45,000 bridges and 173,000 miles of roads, according to the Society of Engineers, are in poor condition. Right now, including more than 1,200 bridges as the governor's been fighting to repair here in your state, 7,300 miles of roads here in Michigan. I'll bet everyone in this room can tell me what the most dangerous intersection in this town or any town they live in and where it is. That you hold your breath when you're driving over trying to cross the street. Not a joke. Working with the governor and members of the Congress here, we're going to put hardworking Americans like the operating engineers here in Howell on the job to bring back our infrastructure and bring it up to speed. Good union jobs, not $12, $15, $18, prevailing wage jobs. Wage that give you dignity, that you can raise a family on, that you can hold your head up. This is a blue-collar blueprint for how we restore America's pride. And these are jobs that can't be outsourced. We're going to put plumbers and pipe fitters to work, replacing lead pipes in America so families and children can drink clean water. 400,000 schools. I mean, it's not just our homes, it's across the country. We're going to put line workers and electricians to work laying thousands of miles of transmission lines and to build a modern infrastructure and energy grid. We're going to make high-speed internet affordable and available to everywhere in America. We're talking about on the way over with Alyssa, that how short the number of access to the internet here because of the lack of investment. We're going to make the largest investment in public transit in American history. And we're going to make the most important investment in our rail system since the creation of Amtrak 50 years ago. And let me tell you, our competitors aren't hanging around and waiting to see what we're going to do. They've been pouring billions of dollars into infrastructure and into this training their people for years now. Take China, for example. Now, I've been clear that China uses unfair coercive practices to get ahead of their competitors, but that's not the whole of the story. They also invest in themselves. In recent years, China has spent around 3 times as much on infrastructure as a share of their economy than we have. 3 times.
Yeah, look at Evergrande.
They're not slowing down. Yesterday, my U.S. trade representative delivered an important speech on our competition with China. She pointed out that China made a major investment in steel plants beginning about 20 years ago. In the last 20 years, half of American steel companies have been shuttered. We went from 100 U.S. steel companies to 51. And employment in the American steel industry dropped by 40%. More steel in 1 month than America does in an entire year. You can see it in the sector after sector. Other countries are speeding up and America's falling behind. We've got to reset the pace again. We've got to set a different pace. For example, here in Michigan, we need to make sure that American auto workers lead the world in electric vehicles. And some of you came to the White House when I had the chairman of the board of General Motors, Chrysler, and General Motors, Chrysler, and Ford. You know, and what did they decide to do? They decided they're going to lead the world and they're going to build more of the electric vehicles than any other country. But guess what? China's not waiting around. They manufacture more than twice as many electric vehicles as we have over the last decade. They control more than 75% of the battery market. And they're poised to invest another $14 billion in charging capacity now in their country. Back in May, I had the chance to tour Ford's new state-of-the-art facility in Dearborn, where union workers are building the first ever all-electric Ford F-150. I got to drive that sucker. It's quick, 0 to 60 in 4.1 seconds. And it's a big boy. It's a big one. Months later, I hosted the big 3 automakers at the White House, where the Ford 150 was joined by the GMC Hummer and the Jeep Wagoneer, all going electric, all in partnership with the UAW. The whole world knows that the future of the auto industry is electric. We need to make sure America builds that future instead of falling behind. We should build those vehicles and the batteries to get them here in the United States of America. That's what we should build here in the state of Michigan. I want those jobs, and no, I really mean it. I want those jobs here in Michigan, not halfway around the globe. That's what my plan will do. The infrastructure bill will put in motion the union workers on the job installing national network of hundreds of thousands of charging stations along our roads and highways and communities, or 500,000 of them. And by the way, parenthetically, when you build a charging station, it's like back in the day when my grandpa worked for the American Oil Company back in the turn of the 1920 in that area. They went from state to state convincing people that they allow them to put 20,000 gallons of gasoline under the ground. They didn't want them around. But guess what happened? Everything builds up around them. You put these charging stations along, how are you going to see significant economic development go well beyond the charging station? And the build plan will boost our manufacturing capacity, investing in new and retool facilities and employ American workers with good wages and benefits. That includes grants to kickstart new battery and parts productions. That purchasing incentives for families to buy clean, union-made vehicles like the ones championed by Debbie and Dan and the Senate and the House. And loans and tax credits to boost clean vehicle manufacturing. Look, these are the kinds of investments that get America back in the game and give our workers a chance. My plan also makes historic investments in clean energy, including tax credits, to help people do things like weatherize their homes, install solar panels, develop clean energy products, to help businesses produce more clean energy. All told, this project will save literally hundreds of millions of barrels of oil on a yearly basis. Not a joke. Those credits could cut the cost of installing the rooftop solar by about 30%, helping families cut their utility bills and helping the country cut its emissions. My infrastructure bill will put Americans to work in long overdue national environmental cleanups. I want a Job Corps, just like Roosevelt had a Job Corps, but an environmental Job Corps of over 1.6 million people. That means good jobs and prevailing wages, capping hundreds of thousands of abandoned oil wells. You know, we have thousands and thousands of abandoned oil wells and gas wells and methane leaks. Well, guess what? The miners and the people who dug those wells, they'll get paid the same amount of money to cap them now. It's going to help us meet the moment of the climate crisis and do away with, it's going to create good jobs, make us more economically competitive. Folks, here in Michigan, you all know the cost of extreme weather. All remember the flooding this summer that shut down 96, the power outages and the tornado warnings. They're costing your state billions of dollars. Nationally, last year, because of extreme weather, cost America $99 billion. 99 billion taxpayers' dollars. I went all over the country. I went out west to the fires. More is burned down in the Northwest than the entire state of New Jersey. That's how much we've lost. You see what's happened with the droughts that are out there. You see reservoirs that are down 30, 40, 50 feet. You're worried about the cooling down. You're worried about whether you're going to have what the Colorado River is going to do. This is a big deal. This is gigantic. And we're not going to ease up. We're not going to ease up in any of this. We have to invest in resilience. Resilience. You saw Texas, their entire power grid went down because they had no resilience, the ability to build back and build things stronger. Why a lot of those fires in the far west? And because guess what? It's safer to have those wires underground, not being knocked down by high winds and tornadoes and the like, causing fires. Look, we haven't passed a major infrastructure bill for decades in this country. It used to be a normal thing to do. It used to be a bipartisan thing to do. If we get this done, we're going to breathe new life into our economy and our workers, and we're going to breathe cleaner air. Economists left, right, and center agree. Early this year, Wall Street, not some liberal think tank, Wall Street and a Wall Street outfit called Moody's projected that the investments in these bills could help our economy create an additional 2 million jobs per year, every year, 2 million per year. That's going to be transformative. And here's the deal. The jobs in my plan are people who too often felt left behind and were left behind, left out. 90% of the jobs in these bills, my infrastructure plan, don't require a 4-year college degree. We need to get this done. But it isn't enough just to invest in our physical infrastructure. We're going to lead the world like we used to. If we're going to do that, we have to also invest in our people, like you do right here in training, this training facility. That's why my second bill, the Build Back Better plan, that's what it does. Take education, for example. When America said everyone is entitled to 12 years of free public education, universal, a century ago, it gave us the best educated, best prepared workforce in the world. That was one of the reasons why America began to grow so rapidly. It's a big part of why we led the world the bulk of the 20th century. But guess what? If we're going to put together a committee today, like they did in 1898, I think it was, and we were going to invent a public education system, there's any chance we'd say that we thought 12 years was enough in the 21st century? Just 12 years? I don't think so. Study after study shows that the earlier our children begin to learn in school, not daycare, the better for themselves, for their families, no matter what the background they come from, no matter what their background. Recent university studies point out that they're increased by 56% the chance of them to get all the way through 12 years of school without getting in trouble. It's a gigantic deal. It doesn't matter whether mom or dad know how to read or write, or the home is a home that is challenging. But right now, we're lagging behind, while other countries are investing in their children. Today, only about half of 3- and 4-year-olds in America are enrolled in early childhood education. In Germany, France, the United Kingdom, Latvia, that number is more than 90%. 90% of their 3- and 4-year-olds. We're falling further and further behind the curve. It's not just early education. According to one study, we rank 33 out of 44 advanced economies when it comes to the percentage of our young people who have attained.
Folks, we're just quickly going to look at what the market is closing at. We'll come right back to Joe Biden, and we'll see what updates we got on this infrastructure plan.
Are the only red sectors right now. Dow going out with a gain of almost 1%. The Nasdaq, the big winner, though, of the three, in a comeback from what we've seen lately.
Look at that. We got Dow Jones up 0.89%, S&P 500 up 1.03%, NASDAQ 1.24%, and Russell 2000 up 0.48% for the day. Did have a little bit of a drawdown there into the close. Back to Biden.
Place for themselves in the 21st century economy, and also increase Pell Grants. They're grants for kids making families less than 50 grand, helping their folks, helping them get through community college or a historically black colleges in order to be able to get a shot so they can live, they can eat while they're going to school. And we'll invest in historically black colleges and universities, which are an essential asset to help to support and to make sure that young people of every background and circumstance have a shot at good paying jobs. Look, this bill also invests in our workforce by providing so much needed breathing room for working families. After all, how can we compete in the world if millions of American parents, especially moms, can't join the workforce because they can't afford the cost of child care or elder care and have to stay home? For example, here in Michigan, the average two-parent family spends $10,400 on child care costs for just one child each year. 30 years ago, the United States ranked sixth among advanced economies in the share of women in the workforce. You know where we are today? 23. 22 countries have a higher percentage of their women in the workforce making a competitive wage than the United States. While our competitors are investing in the care economy, we're standing still. And the fact is, millions of American parents are feeling the squeeze, having a hard time doing their job, earning a paycheck while taking care of their children or aging parents, and at the same time in this sandwich generation. My Build Back Better plan is going to change that. It's going to cut the cost of child care for most Michigan families by more than half. It's going to extend historic middle-class tax cut to the child care tax credit, which we passed in my American Rescue Plan. Now, most people don't know. If you walk to the average informed person, doctor, lawyer, or whatever, and said child care tax credit, they're not sure what that means. Well, what it means is, if you were making a decent salary and you had 2 kids or 3 kids or 4 under the age of 18, you get to deduct $2,000 for each child off your bottom line of your taxes you owe. Well, guess what? If you're making $15 an hour, you don't have any taxes to pay like that. So guess what? You got nothing. Zero. No help. My friends in the other team have no problem giving billionaires and millionaires gigantic tax breaks. This is a tax cut. What it does is now, and it's in place, and people in your state are understanding it now, instead of it provides it up the ante how much you could get for a child under 7, you get $3,600 tax cut on a yearly basis. And you get $3,000 for a child under 17. But guess what we did? That means we're doing it on a monthly basis now. It means you're getting either $300 a month or $200 a month, just like your Social Security check at home. It's cut child poverty in by 40%. That money's already a life changer for so many working families. And as I said, I was wrong. In Michigan, it's 44% cut in child poverty. We need to keep it going. My plan is going to put Americans to work constructing and rehabilitating safe and affordable housing to help ease the cost of housing while generating even more jobs. Most of the major metropolitan areas in America, you can't afford the housing. And it helps to meet the moment on climate change as well. We're setting the course for America to achieve 50 to 52% reduction in greenhouse gas emissions by 2030, for us to reach net zero emissions by 2050. This bill helps us get there in a way that creates good jobs, makes us global leaders of fast-growing clean energy industries like electric vehicles, solar and wind power, battery power. The bottom line is this: when we give working families a break, we're not just raising their quality of life, we're putting parents in a position to earn a paycheck. We're also positioning our country to compete in the world. That's what these bills are all about. If you want proof, just come to this training facility. This is where hardworking folks come to learn how to operate road graders and so much more. Where workers use virtual reality to master operating a crane. They learn how to deal with drones, to look underneath bridges and so on. Where young people in Michigan show up and emerge as expert technicians, engineers, heavy equipment operators. They leave here with a shot at something great, a union job with good wages and benefits that allow them to maintain their dignity and their pride. It's a ticket to the middle class. This is where the economy starts, with you, your skills, your dreams, and your limitless potential. The only thing we've been missing is the will from Washington to finally build an economy around you, an economy that gives you and your family a fighting chance to get ahead, gives our country a fighting chance to compete with the rest of the world. We can't get here thinking small. We have to think big. Let me be clear. We need to prepare for 10 years down the line. That's what these bills do. Both these bills spend out over 10 years, not in the first year. So if you take the infrastructure bill, folks, it's described as a $1.2 trillion bill. What that means is that of all those investments in road, bridges, high-speed internet, water, everything else, all of it would be less than 0.5% of our economy each year. And it's all paid for. And they don't increase the debt because they're paid for by asking the very wealthy to begin pay their fair share. As a matter of fact, a significant portion of this plan cuts taxes for working people. And best of all, the cost of these bills in terms of adding to the deficit is zero. 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 And I made a commitment when I wrote these when I was running. No one making under $400,000 a year will see a penny in their taxes go up. That's why in the infrastructure bill, there is no gas tax increase, because people making under 400 would have to pay more. It's simple. You're working here at this facility, your spouse is a teacher or a firefighter. There's no reason why, combined, why millionaires and billionaires in this country should be paying at a lower tax rate than you do. Hear me again now. A lower tax rate. Police officer, a teacher, a union crane operator, and a nurse, they paid a higher tax rate. A higher tax rate. A significant portion of the major corporations in America and the super wealthy. Look, it isn't right. Isn't it right that 55 of the largest corporations in America in this country, and I come from the corporate capital of the world, more corporations are incorporated in the state of Delaware than every other state combined. But you know how much those 55 companies, I could go on more than that, made over $40 billion and they paid zero in federal income tax. Since the pandemic began, The number of billionaires, and I forget the exact number there are in America, have seen their wealth go up collectively by $1 trillion. $1 trillion. Isn't fair. It needs to change. Look, working folks understand that. That's why, despite the attacks and misinformation, my plan has overwhelming support in the polling data for the American people. They understand what's at stake. They understand that workers and families have a better shot. Americans have a better shot. I'm a capitalist. I think you should be able to go out and make $1 million or $1 billion, but just pay your fair share. Join the crowd, man. They know that this is about dignity and respect. It's about changing the paradigm so the economy works for you, not just for those at the very top. It's about building this economy from the bottom up and the middle out. That's what I've done my entire career. That's why I ran for president. As I said, I'm a capitalist. I think you should be able to make a lot of money in America, but just pay your fair share. Pay your fair share. I took this agenda to the country. They said it was time to build an economy that looks out from Scranton, Pennsylvania, where I grew up as a kid, instead of looking down from Wall Street. An economy that looks out from Howell, Michigan, and towns like it all over America, that brings people from every race, background, religion into the game. That's what, and notwithstanding some of the signs that I saw come, that's why 81 million Americans voted for me. The largest number of votes in American history. A clear majority supported when they supported me. Look, it's now time to deliver. Let me close with this. The world's watching, not a joke. The autocrats of the world believe the world is moving so rapidly that democracies can't generate consensus quickly enough to bring their people together to get things done. They think democracy is not a joke. In my meetings with Putin, in my meetings with Xi Jinping and other leaders, they truly believe that we can't compete in the 21st century because things are moving so fast. Democracies take so much time that they are so divided that they can't get together in time to act. They believe they believe they'll win the day, and they can dictate their way forward and leave us behind. They're betting, not a joke. They're betting for the first time we won't respond to this inflection point in history, and will fail to rise to the occasion. But you've heard me say it a lot of times. It's never, ever been a good bet to bet against the American people. Never. Look, just look back a little ways. After World War II, the United States did what we're trying to do now. Invested in the American people to lead the world. At the time, presidents and Congress of both parties and Americans of all political views stepped up. I'm not being sentimental here. There was racial discrimination was a fact of life. We know how deep-rooted racism is in this country. We saw the Klan marching here in Howell generations ago, and again in recent years. It's a never-ending battle, but think about what also unfolded in these critical decades. Great protest movement. Some of the nation was promised of equity. The GI Bill sent millions of veterans to college. The federal government helped make home ownership possible because it's the vehicle by which people can generate wealth. Most of us who come from lower and middle class backgrounds, that's how our parents are able to generate any wealth, the investments in our home. Those who could previously only dream of having a house to call their own. We invested in the interstate highway system, propelling our economy into the future. We invested in the space race, which led to huge strides in technology. We invested in something called DARPA, a program within the federal government that helped create the internet. Folks, we need to step up again. But the challenge of today is one of economic competition. Let's learn from that history. Not because it was perfect, because Americans then did what we must do now. Invest in ourselves to show the world that American democracy works. And given half a chance, there's nothing, not a single thing we can't achieve when we do it together. I know we can do this. I'm positive we can. I've never been more optimistic about this country than I am right now. We're going to restore faith, pride, and dignity, the future of this country. We're going to pass both of these bills to start building this economy to beat the competition and deliver for working families. Thank you. May God bless you. May God protect our troops. Let's get this done. Thank you. Thank you.
So you gonna answer any questions? I'll give a summary here. Wow, nothing. Okay. All right. Well, okay. Well, I guess we could go through an update in terms of what has been said today by Joe Biden, but also yesterday by Joe Biden. Let's see here. All right, let's go ahead and give a recap of this, and then we'll go ahead and finish up with. Let's see. Okay, there we go. Okay, perfect. So let's go ahead and give a quick little recap here of what the heck is going on in the stimulus world of things. All right, so Joe Biden just talked about infrastructure and the stimulus plans that we have ahead of us. But actually, Elizabeth Warren's talking right now. Hold on, let's listen to her really quick.
Liquidity levels at all-time highs
I'll do a recap in just a moment.
during the crisis and through the stress test, which is they restricted share buybacks and they increased capital requirements for the biggest banks.
Actually, you may want to go back and check your facts. One of the things that Senator Brown and I, for example, kept hammering on was to force the banks, for example, to suspend dividends. If they were going to get taxpayer support, then the banks ought to have more capitalization. And the Fed chair resisted that repeatedly. Look, this is about safety. The job of the Fed
Right,
chair,
no, I
the
said
two parts to the
buybacks.
job for the Fed chair are about, I understand. The part to the Fed chair, though, is to make sure that the American taxpayer is not on the hook again, as they were in 2008, to have to bail out these giant financial institutions. It's not always a popular place to be, but a Fed chair needs to demonstrate that they have the courage, that they have the backbone to be willing to stand up to powerful financial institutions. Our financial institutions are now bigger than ever, and they exercise their muscle with regularity in Washington. And I think that's a problem.
But buybacks certainly were suspended, and capital and liquidity levels definitely also are at record highs. But Senator Warren,
So what facts were wrong there? The dividends?
Dividend point, yeah. But anyway, Senator Warren, we wanted to pivot and talk about your speech today, the other topic, and the trading that we have seen by certain members of the Federal Reserve. In your speech today, just again a kind of question of the scale of wrongdoing, if indeed wrongdoing is proved, that you spoke about in your speech about a culture of corruption at the Fed, which again is pretty strong terminology. Have laws been broken?
I am concerned about a culture of corruption. When we find out that there have been 3 different high officials at the Federal Reserve who have engaged in practices that may be a violation of law, but certainly undermine the public's confidence about whether they are acting to line their own pockets or on behalf of the American people, that's a real problem. And it's a real problem in leadership. We need a leader who makes it clear. I mean, this actually shouldn't have been an issue. Who could be at the Federal Reserve in a position of authority and responsibility and think that it is okay to trade individual stocks or to move from a bond portfolio to a stock portfolio the day before there is a major announcement about possible changes in Fed policy? This is not hard stuff, and it shouldn't be even close to the line. And that raises questions about leadership. I've already said that I will not support the renomination of Chair Powell, but I think this is a second big problem.
And I know in the past, in the last Congress, you introduced the Anti-Corruption and Public Integrity Act, and your aim was to ban individual stock ownership across many different public bodies, the White House, Congress, the Federal Reserve. If you've seen any of our debates on this network about that topic in recent weeks, we understand it because we face tighter restrictions than those public elected officials. I guess, again, I just come back to the question, would you go as far as to say that any single member of Congress, many of your colleagues who's ever traded an individual stock in their entire time in Congress is corrupt? Because you're using those words for a few Federal Reserve members, but I'm not sure you're going the same level with others that seem to be in the same boat in your eyes.
I've been talking about a culture of corruption in Washington for years now. I actually ran for president of the United States talking about corruption in Washington. And a significant part of that corruption is when the American public can't know whether or not decisions that an individual who's in power makes are for that individual's own financial gain or for the good of the country. And I think one way that we deal with that is we just say, you can do one of two things. You can either be a member of Congress, you can be on Federal Reserve, you can run a big agency, you can be in the cabinet, you can be in a big political and economic and decision-making position, or you can trade in the stock market, but you don't get to do both at the same time.
Wow.
Agree. And just to the leadership point, and obviously you're calling attention to the right issues. I don't think Chair Powell would disagree with you, though, that this looks really bad and that the rules need to be changed. In fact, he has taken this issue very seriously. He hasn't shied away from it or diminished it. And just to play devil's advocate to you, he's called for an independent IG investigation, is also doing a Federal Reserve investigation to change the rules, and has not backed any of his colleagues, Clarida, Rosengren, or Kaplan, for what they've done. It seems to be leading on this issue, actually.
This has been dragging on now for a while, and we have found out more about what's gone wrong with this latest Fed report. I believe that this should have stopped a long, long time ago. Look, what does it mean?
Were you calling for the Federal Reserve to not be able to trade members of the Fed to not be able? I know you've been banging the drum on this for Congress, but have you been doing it for the Fed?
I'm sorry. Yes. Go back and read my plans from when I ran for president. It was that nobody gets to be in a decision-making position in Washington and still trade in individual stocks. It's just, no. We should not be able to do that. And frankly, I can't believe anybody would defend that. And I can't believe anybody in that position, particularly at the Fed. Think about the information that the Fed has. They make good decisions
they're going to change the rules
because they get a lot of insider information. It should be clear to everyone who is there that they cannot be trading individually and participating, being in a position of public trust. You just can't do both of those at the same time.
Senator Warren, also wanted to quickly ask you about Facebook as well. I know you were making your speech earlier during part of the hearing with the whistleblower. My main question on this is the extent to which lawmakers need to take responsibility. We know that Facebook does as well, but some of the revelations are new, some of them aren't. And we've had a lot of warnings and information about the potential damage that social media can do to society since 2015, 2016. Why haven't lawmakers acted yet?
Look, part of the problem we have is not just that Facebook is huge and powerful and stomps out its competition and controls a large part of information flows in the United States. It's also that they have great political influence. Their voice is heard louder around these halls than that of most Americans. Go all the way back to Teddy Roosevelt when he talked about breaking up giant corporations. Do you know the principal reason that he used to cite? It was because of their political power, because they kept Washington from doing the things that needed to be done in order to make sure that markets are fair and transparent and work not just for the giant monopolist at the top, but that work for everyone.
Meantime, Senator Warren, urgent issue. You guys need to lift the debt limit to prevent our nation from defaulting. And as Treasury Secretary Yellen warned of another recession today, there's some reporting that Senate Democrats are looking at a bill a carve out to suspend or lift the debt limit. Is that something you'd be in favor of? Go around the filibuster?
Look, the Senate Republicans said they would do nothing to help raise the debt limit, notwithstanding the fact that much of this debt was incurred on a bipartisan basis often while Donald Trump was president. They said they would just rather see the economy thrown over a cliff. They said it's going to have to be on the Democrats in order to raise the debt limit. You're going to have to do it all by yourself without a single Republican vote. The Democrats have said, okay, fine. We will be the adults in the room. We will raise the debt limit. But we need the Republicans to get out of the way and let it happen. They can't filibuster us at the same time and say Democrats have to raise the debt limit, but it'll take 10 Republican votes to make that happen. Just get out of the way and the Democrats will raise the debt limit. That's my message to Mitch McConnell and every Republican.
And finally, before I let you go, Senator Warren, just on this, just to wrap up the Fed conversation, you've obviously come out and clearly criticized Fed Chair Powell, said you're not supporting him for renomination, even though White House Deputy Press Secretary did say that Biden still has confidence in the Fed chair. Why are you not putting out another alternative? And would you support Lael Brainerd, for instance, to become Fed chair, who's on the Fed and has been a little tougher on financial regulation?
The question right now is the renomination of Fed Chair Powell. I've made my position clear on that. I'm not going to talk about other nominees. I don't talk about private conversations with the White House. I'm just making it clear. I cannot support Chair Powell for renomination.
Senator Warren, thank you so much for joining us. We appreciate it, as always.
Thank you for having me.
All right, let's go ahead and do a little bit of a recap in terms of everything that we just saw, a few things. But first, let's just do a quick look at markets, and then we'll go to a recap here in one shape, one form or another. So, okay, what we've got here is we've got in after hours, we have Palantir all of a sudden moving about 4%. I wonder if this is news-based. I'm going to see if I can find out what's going on with Palantir. Is Palantir moving 4% in after hours is either a glitch or something happened. Here we go. Okay, we did get a news piece. Palantir jumps 2.1% in after hours. It's now up 4.2%. And that is because Palantir has been picked for the next phase of an $823 million U.S. Army contract. Palantir has been selected to progress to next phase of Army's competitive $823 million indefinite delivery, indefinite quality contract. Palantir will deploy Palantir Gotham platform to support Army intelligence users worldwide. This capability will field modern data integration, correlation, fusion, and analytic capabilities. So this looks like this must have been an 8K that came out here from Palantir. And let me see if I can get a press release on this. We do have a press release. We have a press release on this. It is Palantir today announced it has been selected by the U.S. Army's Program Manager for Intelligence Systems and Analytics to deliver the Army's Intelligence Data Fabric and Analytics Foundation for Capability Drop 2 CD2 program. Palantir was selected. Okay, so this is where I'm trying to understand. It doesn't sound like it's a deal yet. It says here was selected to progress to the next phase of the Army's competitive $823 million indefinite delivery, indefinite quantity contract. After collaborating with the Army on a successful test, fix, and test process, Palantir will support the Army as they proceed through final testing and fielding. So it sounds like they got picked, and now to progress to the next phase of the Army's contract. Okay, so in other words, they got picked for this next phase of something that the Army is doing, is what it sounds like. This is one of the downsides with Palantir. Palantir is a relatively complicated company in that it's not extremely transparent, like what these things necessarily mean. So, for example, an indefinite delivery and indefinite quantity contract sounds like something that would honestly in business just be straight up illegal. Indefinite quantity IDIQ contract. I've never heard of such a thing. but apparently it exists. Okay, here we go. So take a look at what we have here. An indefinite delivery, indefinite quantity contract provides for an indefinite quantity of services for a fixed time. Oh, okay. For a fixed time. Yeah, usually contracts are required to have a time expiration. They are used when the GSA can't determine above a specified minimum the precise quantities of supplies or services that the government will require during the contract period. IDIQs help streamline the contract process. Got it. So basically, you're our slave. We'll pay you $823 million. Y'all need to give us what we need. Okay, I understand a little bit more now. Palantir will deploy Palantir's Gotham platform to support Army intelligence users worldwide with globally federated intelligence data fabric and analytics platform spanning multiple security classifications. Okay, good. Then we've got Palantir. The capability will field modern data integration, correlation, fusion, and analytics capability that will prepare the Army for the next fight against emerging near-peer threats. Near peer. So that could be in South Korea. That could be anywhere around the world. The Gotham platform is an operating system for defense decision making and specifically designed to connect the dots between disparate sources. The Army intelligence community will use this capability to modernize their data foundation by migrating legacy programs to CD2. The Army will use CD2 to serve as an enabler for future modernization efforts. My gosh, there's so many words in here. Because remember, CD2 is Capability Drop 2. It's a specific program they have. CD2 is one of several efforts Palantir is working on to modernize the Army's intelligence enterprise, along with CD1. We look forward to the continued partnership, so on and so forth. Okay, good. So a contract is with Palantir, and the Army is now moving Palantir up 5.3% in the after hours. So congratulations to Palantir. This is good. This comes just briefly after Palantir lost a different Pentagon contract. So it's nice to see Palantir winning a little bit here. It is interesting because I think it was last week, they lost another contract. And I mentioned, hey, look, you win some contracts, you lose some contracts. I want to see if I can. Oh, yeah. Palantir, that wasn't a Pentagon contract. My fault. Palantir may lose ICE contract providing Falcon system. That's what it was on September 30th. And that led to the stock to fall, especially when you have headlines like Palantir faces loss of pricey government Falcon contract. And the stock fell about 2.5% in after hours after that occurred. But now we've got Palantir picking up another contract here with the Army. So that's good news for Palantir. Awesome. All right, excellent. So that's Palantir news. Then we have Camber. Camber's evaporating. Okay, let's talk a little bit about Camber. I will recap Biden and Warren as well, though most of us saw that live. So what I might do is I might just record that separately and post it right after this. That's probably what we're actually going to do for the infrastructure and Warren talk. It's just going to be easier for me to digest that and then separate it because there's a lot of information there. And I want to combine that with some of the updates that we got earlier this morning and late yesterday. So we'll go ahead and do that separately. But for right now, we just talked about Palantir. We do see Camber Energy dropping here in the after hours, and I want to try to get you a little bit more insight here. Let me see if I can find the darn thing. Oh, yep, here we go. Okay, perfect. So I have some insights here for us. Give me 1 second. Okay. Perfect. All right, stand by for 1 sec. Okay, here we go. All right, so Camber Energy, let's talk about Camber Energy a little bit. Camber Energy is down 50.49%. It is down today 50.49%. It is down 5.88% in the after hours right now. The particular stock has been a very quick moving momentum stock. It has had a lot of energy behind it. And one of the reasons it fell so rough today or so sharply today at around 8:13 Pacific time is because of a scathing report that came out. This report, I'm trying to get some insight in here. We had multiple pauses due to volatility. Looks like Camber comments on the short report that came out. Want to see Camber Energy CEO says business relationships legitimate after short report. Camber says that they've been made aware of the short report. All right, so we had the short report that came out. Let's see here. Oh, yeah, here it is. Okay, there we go. Okay, so this is a 20... Oh, wow, okay. Hold on, let me see if I can pull this up. This is incredible. This is a long piece. Oh, yeah. 25-page short report. Hold on a second here. Let's see what's going on. All right. Try to get this to the iPad, and then we can talk about it. All right. Bloomberg is making my life miserable, apparently. Come on. It's not that hard, Bloomberg. Just save the document. I want to show it to y'all. Yeah, all right. My computer. There we go. Got it. Oh, no, apparently I don't. All right. Well, they're making it a little difficult to get documents to us today. I do not understand why. Oh, well. Well, anyway, so there was a short report apparently and allegedly bashing Camber's business relationships, to which the CEO said, no, this is not true. Our business relationships are legitimate. What I do want to do is go through this document once I can actually get it handled, and then we'll probably do a review on that. I think it's very interesting. It is a stock, though, that has had a lot of momentum in it, so you do not have, in my opinion, a lot of buy and holders on this particular stock. You've got a lot more momentum built into this stock than anything else, and this is pretty common when you have a momentum buildup like this to end up getting some sort of a short seller report coming out. So, okay, then, yeah, okay. I'll get to the bottom of that. So check back in a little bit, and I'll do a video on Camber. Videos I've got coming out, here's what we'll do. Just because there's so much going on, I'm going to do it in this order. But number one, I'm going to release the infrastructure. I'll just do a nice consolidated report on infrastructure. Number two, I will get a video out on SHIB and crypto. And then I'm going to get a video out on the Camber Energy here, CEI. I've also got a video coming out on oil, so stay tuned for that if you are interested in that as commodity folks. So I'm going to go ahead and break those down and actually provide proper insights. We'll also include an update from Warren on the infrastructure, so it'll probably be like what Warren and Biden just said, as well as big updates on the package. So stay tuned for that. I'm going to go ahead and put these together in an organized manner so that way I don't waste your time. So come back, stay tuned for those videos. I appreciate you being here for this live stream, and we'll see you soon.